Well, recently, folks, we just heard the iconic Charlie Munger speak at the Daily Journal, and he is moving stock prices, specifically Alibaba, which we're going to be discussing. He also mentions an upcoming crash, how he's trying to manage that, which I found very intriguing. We're going to be going over some dividend stocks along with Shopify earnings and so much more in between today. If that's a conversation that interests you, as always, just consider hitting that like button, folks. But first and foremost, let's just talk about the Ryokan. Welcome back, my Ryo clan, because my goodness gracious, this is the only stock offering any kind of glimpse of green in my portfolio. This thing over the last 5 days up 5%. Year to date, guys, up 7.55% with that juicy over 4% dividend yield. I mean, we are drastically outperforming the market, so by no means complaining. We are getting back to the pre-pandemic levels here. So let's see $25 a share, and all of us can sleep much more peacefully at night outside of Ryokan offering a little bit of light. I'm glad I didn't buy into Shopify here, guys. I've been looking at this one, eyeballing it. It's on my buy list, but taking a look, trading down 56% after earnings on lowered guidance. Now, this company is making massive billion-dollar investments into warehousing, logistics, distribution, similar to Amazon to offer some more to their clients that are dealing with more physical products instead of having to use a third party, say ship out of Amazon, but use Shopify to sell it. So I found that very intriguing. But so you're really relying on some of that future potential while the growth slows down a little bit here. But if this thing drops enough, I'd be inclined to buy it. The problem is at a 27 PE, it's not nearly as attractive as Facebook. I feel like these two companies play in tandem, but I'd rather get one of these massive mega caps. And it's crazy to think that almost from $1 trillion, Facebook today is trading at 588 billion, guys. Take a look from those highs, trading down 43% here. It's still selling off. I did, like I said, end up buying a little bit of it back, rebalance the portfolio to de-risk some of this excessive volatility coming out of large caps. I'm really worried still after Q1 we could start seeing Apple get hit, perhaps Google, perhaps Microsoft, perhaps Tesla. So I'm a little bit hesitant in this market when we start seeing the likes of Facebook and all these other mega caps trade down this aggressively. And keep in mind, they did not offer guidance. Q1 is going to be a pivotal moment for some more of these large caps. But getting into some foreign large caps here, guys, we got to talk about Alibaba stock, of course. If we zoom in to the last 5 days, it jumped up pretty aggressively after that Daily Journal meeting, up 3.31%. Still trading in its lows here, but I would be highly fixated on this moving forward because I feel like, now that the political rhetoric has kind of been set aside, everyone's really focused in on Russia. A lot of people might be able to get more comfortable with buying into some of these more Chinese-based companies, especially after Charlie Munger said some of this stuff. I mean, he makes these points very simple and refined because people were grilling him. They're saying, what about communism? The lack of freedom of rights and all this other stuff coming down on these Chinese companies. So take a listen to what he said. Very simple, very refined.
Well, we did it for a very simple reason. We got more strength per dollar invested. In China, the companies we invest in are stronger relative to their competition and priced lower. That's why we're in China.
Now, he did obviously mention a lot more. Baba was a huge subject of choice, so I'm going to leave the link to that interview in the description below. I highly recommend you watch it. Icons like that aren't going to be around forever, just like the Vanguard S&P 500 creator Jack Bogle, and those guys offer the best and most critical insight, I think, over any other kind of millennial YouTuber, including myself, Graham Stephan, and of course, we got to talk briefly about Meet Kevin, because I mentioned in past videos something called a confirmation bias, where you start looking for things to prove what you think is happening in the market, and you kind of just shield out other news. And I noticed that Meet Kevin broke down some of the words Charlie Munger said, but really fixated on the idea that he thinks that this crash is coming, and he's trying to find things Charlie Munger said to reconfirm that. But I noticed that Charlie Munger, more than halfway through that interview, talked about how he feels about the current tides in the market. Take a quick listen.
I want to swim as well as I can against the tides. I'm not trying to predict the tides. If you're going to invest in stocks for the long term or real estate, of course there are going to be periods when there's a lot of agony and other periods when there's a boom. And I think you just have to learn to live through them. And as Kipling said, treat those two imposters just the same. You have to deal with daylight and night. Does that bother you very much? No. Sometimes it's night and sometimes it's daylight. Sometimes it's a boom, sometimes it's a bust.
I love that he says we are not going to predict the tides. You're just going to try and do your best and swim within them. Not something that I noticed Meet Kevin was willing to mention in his video. And obviously, I really feel like in this very moment, Meet Kevin's going to go down as either one of the most iconic investors of our generation. Like, he's either going to have the likes at scale of Bill Ackman, or dare I even say Michael Burry, if what he's predicting pulls off. Because if you don't know, Meet Kevin thinks the markets are going to tank. He thinks interest rates are going to get aggressive. It's going to cause a lot of pressure. And then basically he's going to wait for the Federal Reserve to ease the brakes on interest rates, or start offering a U-turn direction where the markets tend to take off in every single crash in history. And whether that plays out or not is either going to be complete FUD and entertainment value, and it's going to just completely destroy his reputation, or again, he's going to go down as an iconic investor. But putting that stuff aside, guys, let's just talk about the markets here real quick, because there ain't green anywhere I look recently. I mean, just take a look at this, guys. It's been a kangaroo market thus far, with I think more downtrending than uptrending, because those stocks that are dragging your portfolio down, that aren't flatlining right now, aren't feeling that good, considering our mega caps have just been kind of up and down, up and down, up and down. But like I said, at least a glimpse of some green coming out of my real estate investment trust. I wish I owned a lot more in this market. Things would be a lot juicier. I know some of you guys are heavy real estate investors out there, so congrats, because the REITs have just been on fire, including smart centers. Now, I did leave a little bit of room with RioCan to sell more of it down. I wasn't that aggressive on scaling it back yet. It is still the largest position in my portfolio as it stands in this moment, and I don't want to be selling too aggressively out of a rally, because typically once you get caught in these rallies, the momentum tends to carry it for some little bits of time. So like I said, no rush, but I did sell a bit of it down to buy smart centers. Talked about this in a past video, and even smart centers is still trading up nicely from where I've been buying it. Whether that continues, largely debatable. But other than that, folks, like I said, finding green in this market, good freaking luck. This is why I love my juicy dividends. But on that note, folks, I'm going to pass the question off to you. How do you feel about this market? What do you think about Alibaba? Is this the time to start buying it? And then again, man, make that list. I've got a good short list of companies like Shopify, Baba, anything that is related to what I like in growth. And when I start seeing a glimpse of turnaround, or a continued sell-off, we'll see. Maybe I'll start buying some new stocks. But you'll have to consider subscribing for that. Stay cool, stay awesome, and as always, I look forward to catching you in the next one.